Hello, everybody. Good morning. Here in the United States as of recording. Today is February 18, 2019. So today I will be talking about how you are going to share self-realization. Probably you want to share this to your associates or you want to share this to people who are looking also from being an employee to become business people. So let's go now for the training right away. So self-realization is the fulfillment of one's own potential. In other words, we are now teaching people how are they going to see their own potential. And we are going to teach people from having their own potential to become what they want to become. So this is a self-realization, and it's very important in terms of mindsetting people, and also for you. As you listen to this one, you're also having your own mindset on how you are going to deal with the business. So this is a very good example and a very good quote from Richard Branson, the um, the owner of Virgin Galactic and Virgin Airlines. Entrepreneurial business favors the open mind. It favors people whose optimism drives them to prepare for many possible futures, pretty much purely for the joy of doing so. So, in business side, in entrepreneurial side, it really favors the people who are also open-minded. So that's from a business tycoon, Richard Branson. So let's go now to the details on how are you going to share this self-realization. So Robert Kiyosaki also in the book Rich Dad Poor Dad and the Cash Flow Quadrant was also discussed. So in this quadrant, this is also commonly called ESBI, or Employee, Self-Employed, Business Owner, and Investor. This is very common in other network marketing trainings, and this is also very common for people who are also venturing to business, from becoming an employee or being an employee and self-employed, and how are you going to go to becoming a business owner and an investor. So this is very precise example of the reality right now. So there are only four kinds of people in the business world. That will be employee. Employee have a job. They receive salary on a weekly or bi-weekly or monthly basis, and they have a boss. They have a supervisor, or they might be a supervisor. So they are working for someone. On this left quadrant, like E and S, they trade time for money. Employees trade time for money. And on this side, employees also, if they want to double their or have a greater income, they will study and get these MBAs, doctorates, but still they trade time for money. So that's the employee mindset. On the other hand, on the left side, on the lower part, left part, you have here self-employed. Self-employed like doctors, lawyers, engineers who owns firms. They are self-employed. They work for themselves. And the drawback on working for yourself is you can only serve a limited number of clients. I have a lot of friends who are accountants, and they own, CPAs. They own a CPA firm. I also have friends who are lawyers. They own law firms, legal firms. They can only serve a number of certain clients in a day. So that's a drawback right there. So the money is very limited, and comparing to employees, self-employed has bigger earnings, because you can do a job based on your time. So that's self-employed. On the other hand, you have here business owners. Business owners are people who owns a system, and you hire people to work for you. So business owners, the difference between self-employed and business owners is that business owners owns a system. So the business owners also hire people, and they hire the best people that they can find. So business owners hire employees. So the business owner, you can actually there's a term right there. You can double your income by doubling your system. And on the other hand, you have here investors. So investors makes money through having money. So money works for them. So these are just the basic example of what a future of your life will be. If you want to stay as an employee, then um, you have to find a way to go to become a self-employed, or to become a business owner and to become an investor, so that you will earn time freedom. On the left side, employee and self-employed, they work for security. So security means they are working for benefits, steady paychecks. But business owners and investors, they work for freedom. Freedom means to do whatever you want on your own terms. So this is the basic cash flow quadrant. You can explain this. You can go to other YouTube videos and try to understand the principle behind the ESBI. The next principle is that you can also do is you can teach people to understand what is a cash flow. So cash flow is a cash, and basically is there's a cash flow statement in accounting. It's just the flow of cash actually. So if this is a comparison between a cash flow pattern of a rich person and a cash flow pattern of middle class and poor class. So let's start with the poor class, which is on the right side, and middle class. They have a job, they receive salary. Their salary, they buy liabilities. So liabilities like mortgage, they want the latest car. They have credit card debt, which is bad debt. Credit card bad debt. Actually, you can use business, or you can buy assets using credit cards, but it's fine. And school loans. So after that one, they pay their liabilities. Then they pay taxes. They pay and mortgage and car payments. So on simplest form, middle class and poor people buy liabilities first before buying an asset. Let's go now to the rich person's cash flow pattern. So a rich person has multiple source of income. They have rental income, they have dividend, they have interest, they have royalties, and other sources of income. So this income, they buy other assets. They buy another real estate. They're gonna buy a house. They will renovate it, and then they will invite people to live on the house, and to pay rent. So that also real estate. They buy stocks. They buy bonds, notes, intellectual properties, and other forms of assets. So in terms of USANA, you're buying products which are assets. So that asset will give you and will give you profit over and over again. So the difference between an asset and a liability is that asset gives you money, or puts cash into your bank account, or into your pocket, while liabilities take out money from your pocket. So that's the difference between a rich person's mentality, or rich person's cash flow, and or in relation to, or in difference with cash flow pattern of a poor person, or in the middle class. So this is also another step. So our first is understanding the cash flow quadrant. You can share this to them, and also teaching people to read or to understand the cash flow pattern. The third is understanding the rat race. The rat race is 9 to 5. Basically, you go to your job at 9, you leave your job at 5, and you do it for 40 years before you retire, and that's the rat race. A lot of people are thinking that they are running, or they are climbing a ladder but it's just a treadmill that generates income to the company or to their boss. So you need to understand that if you want time freedom, you need to get out from this rat race. And to get out from this rat race is that you need to go from from being an employee and self-employed to become business builders or business owners and investors, so that money will work for you, and so that you will enjoy your time and you will have time freedom. Aside from this, you need to understand between the employment and the entrepreneurial or the business income. So I will just explain a little bit of this because this is very important. This is a very basic example of the difference between having a steady paycheck and doing a business. But you can also do you are doing employment in the morning and then you start doing your business in the evening or on your free time. So that's also a very good start. So on this diagram right here, you can see green line, which is from top to bottom, and blue line, which is bottom going to the top. So the green line is the effort. So when you're starting the business, you will give your 100% effort. And even if you will give your effort, your very best, you will give your very best, your income will start from very very low. I have never seen a company that started and then they got their goals or their income goals right away. They started very small. Even Amazon started in a garage. Even Apple started in a garage. Even Microsoft started in a garage. So everyone that started a business understands this, that even if you will give your big effort, your income will not be proportionate to that one, and it takes time to build an income. So as you go along with your business, your effort becomes lower and lower while your income goes higher and higher. And on this middle part right here, when effort and income meets, that's the equilibrium. That's the time that you can quit your basic job, because your commission and your effort will now cross. And as you go along, as you hire people, as you build your business, your effort will become lesser and lesser, and your income will grow higher and higher. The difference between employment and income is that in employment, even if you will give your effort, your income will be the same. And if you want your income to get a little bit higher, then you need to acquire or get more responsibilities, and that's not a good future plan, because you will run out of time. So that's employment and entrepreneurial. And also, aside from that, the benefits of having a home-based business. So this is taken from Business Monthly of St. Louis. Um, the benefit of having a home-based business is that you can start immediately, and minimal startup capital is needed, and you will have no rent because you can start you can start at home, and you can be comfortable. You can wake up the time you want. You can sleep the time you want. And just like me right now, I'm having my home-based business. I'm recording this, and I have my son on the bed. I'm just watching him grow, actually. So I'm now full-time dad, and I also have a full-time online home-based business. So it also reduces commuting. It has tax benefits because I can deduct all my business related expenses to my income tax later on. So aside from that, the best thing that I noticed is that there is no office politics, and you don't have to give um, give a lot of patience for people in the office when you are doing employment. And there's a very low risk or trial and error, because in doing home-based business like Usana, you have a team and you have mentors to teach you what to do and what not to do. So that's the that's the benefit right there. So aside from that, you can also teach this to people who are also interested into looking like what kind of business they want to venture. You can see right here four kinds of business. You have here traditional, franchise, direct selling, and Usana. Usana is a network marketing company, and Usana is the goal of Usana is to create the highest rated nutritional supplements in the world. And Usana was already um, the Usana already is creating that. And the capital investment of a traditional business, like traditional like sari-sari store or a store, basically, if you want to open up a like 99-cent store here in United States or in the Philippines, like Gaisano or Ayala malls, you need to have a ton of money, because you need to invest for the capital investment, basically. And the risk is very high. Traditional business like a small store, you really don't have the expertise, because you don't have mentors to teach you. Aside from that, the risk is high because it needs a good location, and the risk is high aside from that, because typhoon might get along the way, and other political problems, or problems between peace and order on that location. That's also a factor that needs to be considered. And the return of investment of traditional business is somewhat between 5 to 10 or more than 10 years. So if you are going to invest 35 100 million pesos, or shall we say $500,000, you have a high risk. uh, that business is very risky. So let's go now to other category, which is franchise, like McDonald's, Starbucks, Jollibee. Franchise, you need to have at least a ton of money to start a franchise or to buy a franchise. The risk is high because franchise is very very strict. You have to yield with the laws and regulations of the franchisor, or the person who's selling the franchise, and you need to be very diligent in following the rules and regulations that one. And aside from that, the return of investment for franchise differs from how much capital investment you have given. But in terms of like McDonald's, Jollibee, it takes more than 15 years, so that you will have, or you will receive the return of your investments. So there's also another category like direct selling. You have Avon. The capital investment is very low. The risk is high. I'm gonna explain this. Um, the risk, why the risk is high, and of course the return of investment. If you're going to involve yourself in direct selling, you have here Rainbow. You have here Salad Master. They are direct selling, and the risk is high because if the person wants to become an associate or a distributor, then you will become a competitor. But a lot of direct selling companies already knows this. Like, say for example, my aunt is selling Avon products to my mom, and my mom discovered that she can buy directly to the company, Avon, in the city locality, on our place. And there was, of course, there was referral fee, but the thing is, you will become competitors with the person that you are selling if you are an associate right now. And in Usana, it is capital investment is very low. It's just less than $400 actually in the Philippines, and even here in the United States. And there are also times like there are promos, and you will receive a lot of discounts in opening your business. the risk is very low because you can even if you don't even if you like or you don't like the product, if you're going to return it to Usana will refund you, and there's a refund policy on that one. So there's no risk of losing your of you losing your money. And the return of investment in Usana is actually less than 1 month. And if you're going to do it faithfully and do it diligently, you will have your return of investment will really exceed your expectation actually. So in terms of personal experience, I was doing accounting job here in LA, specifically in city of Vernon. And when I started doing Usana, really doing Usana, it helped me quit my job actually. I'm not advising you to quit your job right away. I started doing Usana part-time, and right now my income is becoming full-time. So I'm now a silver director in a matter of 6 months after really doing the business. So that's Usana right here. So this is just the basic examples on topics that you can open to your clients or to your prospects later on, and you can teach this to them so that they will open their mind in terms of choosing really what business is for them. So good luck and God bless, and I'll see you on the next training video.